What changed in Korean market structure today? And what does it mean for tomorrow's session? It's Tuesday, June 16th. Here's what investors are watching in Korea today. So we are seeing some massive hidden market forces completely warping the daily action right now.
Oh, absolutely. Especially if you're, holding standard Korean tech stocks.
Right. I mean, let's look at the sheer scale of the leverage coming online. LeverageShares just listed triple leveraged exchange-traded products on Samsung and SK Hynix over in London. And meanwhile, here at home, domestic double-leveraged ETFs have just ballooned. They hit roughly 4 trillion won, so that's 2.9 billion US dollars, and 5 trillion won, or 3.6 billion US dollars, in literally 3 weeks.
Yeah, the scale of that capital concentration is honestly staggering, and it produces this immediate flow divergence right within the semiconductor sector.
Okay, but I have to push back a bit on what this actually means for the rest of the market. When you have roughly 9 trillion won, about 6.4 billion US dollars locked up in domestic leverage for just these top-tier names, doesn't that create a massive seesaw effect?
Oh, for sure.
Like, is this basically a black hole just sucking all the oxygen and capital out of the room, leaving the non-top tier stocks to just suffocate?
Exactly. But it's actually worse than just draining capital from the rest of the market. These leverage products force end-of-day rebalancing trades daily, which completely amplifies structural #KOSPI close-of-session volatility.
Wait, how does that work mathematically?
Well, think about how a triple leveraged fund actually works. To maintain that exact 3-to-1 ratio, the fund managers mathematically must buy more stock when the price goes up and sell when the price goes down.
Oh, wow. So they are systematically forced to buy high and sell low right at the closing bell.
Exactly.
So if Samsung has a good day, these leveraged funds are forced to buy millions of shares at the end of the day, which artificially spikes the price even further.
Precisely. It's a feedback loop. And that forced mechanical buying isn't just a large cap problem anymore either. We're seeing structural distortions hit thematic funds right now.
Right. Which brings us to space.
Yeah.
Because if you think the semiconductor leverage is wild, you have to look at what's happening with thematic ETFs.
Yeah, the divergence there is crazy.
It really is. 6 Korean ETFs just deployed 334.5 billion, won roughly 239 million US dollars, into the new SpaceX IPO. But the outcomes for investors were just, well, entirely disjointed. I mean, the ACE U.S. Space Tech Active Fund actually fell 10.81% because its existing aerospace holdings completely collapsed.
Right. While the Tiger Global AI Active Fund actually gained 7.66%.
Exactly. How does that even happen?
That is the ultimate trap of thematic investing, Pre-existing aerospace exposure determined day one outcomes over the actual theme selection at the opening bell.
Wow.
Listeners, if you bought that space fund expecting a SpaceX pop, you just got dragged down by the legacy aerospace stocks already sitting in that portfolio, and the turbulence isn't over.
No, because CBOE SpaceX options open today, right? June 16th.
Yep. Which is driving additional spot buying for hedging purposes, and that's amplifying intraday volatility even more.
To put that simply, because people are trading options on SpaceX today, market makers actually have to go buy